Welcome back to the Ultimate Trading Podcast for beginner traders, where we help you build your foundation for success in the markets. I'm Isabel Maria, and today we're diving into Chapter 4 of our series, Trading Psychology. This chapter is packed with valuable lessons on how to master your emotions, control your impulses, and develop the mindset of a successful trader. In this episode, we'll be covering tips 31 through 40, and believe me, these are some of the most important tips for your trading journey. So, let's get started. If you've been following the podcast up until this point, you know that trading is not just about reading charts, analyzing trends, or picking the right indicators. At its core, trading is a battle of psychology. Your emotions, your mindset, and your ability to control both can make or break your success in this game. Let's talk about emotions. If you're a new trader, you might be thinking, I'm in this for the strategy, not the drama. But here's the reality: your ability to control your emotions in the heat of a trade, especially fear and greed, is absolutely crucial for long-term success. Fear is one of the biggest hurdles for new traders. It might manifest as the fear of losing money, or even the fear of missing out on an opportunity. We call that FOMO. When you feel fear creeping in, it often leads to poor decision-making. For example, let's say you're holding on to a position, but the market starts moving against you. That fear? It pushes you to exit prematurely, even when your analysis says the trade has more potential. And just like that, you've locked in a loss that could have been avoided. On the flip side, there's greed. Greed drives traders to overtrade, to take on more risk than they should, or to hold on to a losing position, hoping it will turn around. Sound familiar? Maybe you've been in that spot before. You've taken a trade, and the market goes against you. But instead of cutting your losses, you think, it'll come back, I just need to hold on a bit longer. And the next thing you know, your small loss turns into a much bigger one. So, how do we control these emotions? First, you need a solid trading plan. A plan is like your roadmap. It helps you stay on course even when your emotions are pulling you in different directions. A trading plan outlines your entry and exit points, your risk management rules, and your long-term goals. If you have a plan, and you stick to it, fear and greed won't have as much of a hold on you. Setting realistic goals is another key part of this. If you set your sights too high, if you expect to make massive profits every single trade, you're going to be constantly disappointed. And that leads to emotional trading. But when you set realistic, achievable goals, you set yourself up for steady growth. Risk management is a huge part of keeping your emotions in check. If you don't have a stop-loss in place, you're inviting fear and greed to take control. The beauty of stop-loss orders is that they remove emotion from the equation. They automatically limit your losses, which means you can walk away from a losing trade with a clear mind, instead of letting your emotions drive you to make rash decisions. I also highly recommend keeping a trading journal. Write down every trade, not just the technicals, but also how you felt. What were you thinking when you entered the trade? What were you feeling when the market moved against you? How did you react? Over time, this journal will give you valuable insight into your emotional patterns and help you avoid making the same mistakes. Let's look at a case study to really drive this home. Let's take a look at two traders, John and Sarah. Both are retail traders, both have been in the game for about 2 years, and they both trade stocks. But their approach to trading is completely different. John, unfortunately, has a habit of letting emotions control his trades. He constantly checks his account balance, and he reacts impulsively to every bit of market news. When the market starts moving against him, his fear takes over, and he exits his positions too early. But when the market is doing well, greed drives him to overtrade and hold on to losing positions, hoping they'll turn around. John doesn't have a clear plan, he's trading based on gut feeling, and it's hurting him. Sarah, on the other hand, is much more disciplined. She follows a well-thought-out trading plan. She sets realistic goals for herself, and she sticks to her risk management rules. She also maintains a trading journal to track her progress. When the market is volatile, Sarah doesn't panic. She sticks to her strategy, uses stop-loss orders to limit her downside, and takes profits according to her predefined targets. Her approach is methodical, and it's paying off. Let's compare their results. During a particularly volatile market phase, John's emotional trading leads to significant losses. He's out of trades prematurely due to fear, and he holds on to losing positions out of greed. As a result, his portfolio takes a hit, a 25% decline over a few weeks. Sarah, meanwhile, sticks to her plan. She uses stop losses, takes profits when her targets are hit, and remains calm even when the market moves against her. As a result, she ends up with a modest 10% gain during the same volatile period. The contrast is stark. John's fear and greed led him to make decisions that hurt his portfolio. Sarah's disciplined approach allowed her to stay level-headed and come out ahead. So, what's the takeaway here? Controlling your emotions is critical in trading. Fear and greed can cloud your judgment and lead you to make poor decisions. But if you stick to your plan, set realistic goals, and practice good risk management, you'll be much better equipped to weather the emotional ups and downs of the market. As we wrap up, I want to leave you with a question. Think back to a time when emotions played a big part in your trading decision-making. How did it impact the outcome? Would you approach that trade differently now, knowing what you know about controlling your emotions? Drop your thoughts in the comments down below. I'd love to hear how you manage your emotions while trading, and if you've had any aha moments when it comes to emotional discipline. And don't forget, controlling your emotions isn't just about avoiding losses. It's about making rational, well-thought-out decisions that will lead you to long-term success. Fear and greed are powerful, but they don't have to control you. If you manage them well, they can be your allies instead of your enemies. Thanks for tuning in today. We've got a lot more coming up in this chapter on trading psychology, and in the next episode, we'll dive into how to develop a resilient trading mindset. Until then, stay disciplined, stay focused, and most importantly, keep learning.
Thank you for listening to the 101 Trading Tips in the Ultimate Trading Podcast, brought to you by bellsforex.com AudioWorks. We hope this episode gave you insights, perspective, and practical ideas to strengthen your trading mindset and improve your decision-making. Stay disciplined, keep learning, and remember, every trade is a step toward building your edge. If you found value in today's episode, don't forget to like, subscribe, and turn on notifications. Sharing the podcast with fellow traders helps us grow and bring even more free trading education to the community. Visit us anytime at bellsforex.com for resources, guides, and tools to support your trading journey. Until next time, trade smart, stay disciplined, and keep building your edge. Happy trading!